It's Friday, the 27th of August, 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. And if 5 minutes isn't enough, then find more news and interviews in our longer daily podcast called Fear and Greed. In today's headlines, Qantas announces a $2.35 billion loss, but hopes to be flying overseas again by the end of the year. Plus, New South Wales records more than 1,000 COVID cases in a single day, but Premier Berejiklian still announces easing of restrictions. Woolworths struggles keeping shelves stocked as COVID bites, and business investment picks up, but the economy may still be heading for a double-dip recession. Our lead story today, Qantas reported a $2.35 billion loss for the last financial year, bigger than expected, as the carrier tries to manage its way through the COVID pandemic. Over the past 2 financial years, the group has lost more than $5 billion. Chief Executive Alan Joyce said trading conditions have been diabolical as a result of international border closures for the full year and state border closures for much of it. Mr. Joyce hopes international travel can return again before the end of the year, given the pace of the vaccine rollout, and he wants state premiers to stick to the national reopening plan. The airline, in a statement, said the United Kingdom, North America and parts of Asia had high and increasing levels of vaccinations, suggesting they were the most likely destinations to open up. But flights to Indonesia, including Bali, the Philippines, Thailand and South Africa, were not likely to resume until well into next year. No one has suffered from COVID economically as much as the travel and tourism companies, and few people are continually as optimistic about the future as Qantas's Alan Joyce. He's needed to be. Let's hope the worst is over for the flying kangaroo. In overseas news, Wall Street turned negative overnight after a terror attack in Afghanistan killed 12 American troops, and ahead of a gathering by the Federal Reserve scheduled for this morning Australian time. The explosions outside Kabul's international airport caused at least 60 deaths and occurred less than a week before US forces are due to depart Afghanistan. The Taliban, which now controls the country, condemned the bombing and blamed the US for drawing a large crowd to the airport. The Financial Times is reporting that ISIS-K, an Islamic State affiliate not linked to the Taliban, could have been responsible. Around 100,000 people have now been evacuated from Kabul in recent weeks by the US and its allies. About 4,000 people have been flown out by Australian Air Forces, with the rescue mission now coming to an end. And Singapore will force mandatory climate-related disclosures for listed companies under proposal due to kick in next year. The Singapore Exchange is one of the first stock markets globally to do so. Locally, New South Wales recorded 1,029 COVID cases and 3 deaths yesterday, but Premier Gladys Berejiklian announced a slight easing of restrictions from September 13, including allowing 5 people to gather outdoors unless they come from hotspots. She'll make an announcement on schools returning today. Looks like Ms. Berejiklian's strategy is to force people to get vaccinated without quite mandating it. Victoria recorded 45 new cases yesterday, and the ACT recorded 9 new cases. Woolworths boss Brad Banducci said the current financial year could be tougher than 2021, as the supermarket fights to keep shelves stocked and doors open. Around 3,300 Woolly staff are in isolation, and around 10,000 staff are likely to be impacted by rules in New South Wales about being vaccinated if you live in a hotspot. Online demand was booming, but the group was losing sales due to out-of-stock lines and a 3-day wait for home delivery. And many staff continually have to contend with working in stores listed as exposure sites. Mr. Banducci's comments came after he announced a 20% jump in net profit to $1.5 billion for the last financial year. Capital spending bounced back during the June quarter. Private sector capital expenditure rose 4.4%, much higher than forecast. It looks like the reopening of the economy earlier in the year led to plenty of business investment, a key ingredient in economic growth. The figure feeds into economic growth data due out next week. We already know that the economy will contract during the current quarter because of lockdowns. If it contracted during the June quarter, then Australia will experience, technically, a double-dip recession. The federal government wants to overhaul the national electricity market, whereby power producers will be paid for having generating capacity available when needed, rather than get paid for the total electricity they produce. Critics said it's effectively a coal-keeper measure because fossil fuel energy sources are more on demand than renewables. They also argue that energy users may be hit with higher costs to get guaranteed supply reliability. And former Telstra Chief Executive Ziggy Switowski will replace Helen Coonan as chair of Crown Resorts. Now that's a tough gig. Mr. Switowski, who has one of the great names to say out aloud, is a seasoned company director and chair of the NBN and Melbourne's RMIT University. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning and search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today we're talking to the chief smuggler, yes, that's really his job title, at Aussie swimwear company Budgie Smuggler. Don't forget to follow us on LinkedIn, Facebook and Twitter, or go to fearandgreed.com.au. I'll be back later with the afternoon market report. I'm Sean Aylmer. Have a great day.